All right, good morning, everyone. It is 9:22 on the morning of August 23rd, 2022, and this is my pre-market strategy session. So I just did a pre-market strategy session, and unfortunately, I had the wrong streaming key in my streaming software, and so that who knows where that stream went? It's in the ether somewhere, I guess. Okay, so just to make a long story short, long story short here, real fast, pre-market strategy session. I'm expecting to see the SPY not move much over the next few days. Here we are at a consolidation zone in here, and in here, and in here. So I'm expecting to see a few days of consolidation right in here, and then I am expecting to see after it finishes consolidating, I'm expecting to see some downward momentum on the stock markets. Just so today, I'll probably take it pretty easy, and only if the market gets to really sort of extreme levels of overbought or oversold will I take a trade. Otherwise, I'm just going to kind of sit tight today, sit on my hands, and just wait for the big juicy opportunity. And what I think is going to happen is we're going to end up getting a few days of sideways motion here until it resolves to the downside. In fact, actually, what I really think is going to happen here. Let me do this. I think we're going to get a few days of chop motion, an attempt to come back to this support resistance line, and then not actually hit it, but come close, and then take off further down. So basically, today I'm going to sit on my hands I expect to sit on my hands for the most part, unless things really start to fall apart and we break down below these support zones. But otherwise, yeah, everything's looking like it's going to be a pretty quiet day. There might be some activity in the first hour or so. It's still summertime. The summertime markets they just tend to be a little bit different, a little bit slower. I think oil is going up. That's my opinion. There's something about the Saudis and OPEC not pumping anymore. The consumer is still, the American consumer is quite resilient. There is a forecast that layoffs are about to crank up, and economic activity is going to slow down. It's just. I think there's another consolidation zone here. We are right here at the consolidation zone here and here, and it's really quite possible. It would be actually really cool to see a little head and shoulders action happen here, and then, which I think eventually it's an eventuality that this thing starts heading down. And the 10-year, 2-year spread still underwater. It's cut the depth in half. The lowest point was greater than 500 points difference, and it's now back to roughly 267. So the history shows that it's not until the yield curve starts to normalize again that the market really starts to take a hit. Here's 2007, and the yield curve was inverted for something like a total of like 18 months or 12 months here. I don't remember exactly. And then one of these two, it's 12 months, the other one's 18 months. And it doesn't, the crash doesn't start to happen until the yield curve normalizes. This blue line kind of represents the start of the crash in 2001. And this one is in 2007, sort of represents the start of the crash. And you can see it's not until the yield curve starts to normalize again that the crash occurs on the broader market. All right, everybody, good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.